Welcome to the Accounting Bible. You've came to the right place to understand accounting in an easy and simplified way. If you find this video helpful, share it with a friend, hit the like and subscribe button. Now that you have learned the definition of assets, liability, and equity, we can talk about the fundamental accounting equation, which is assets equals liability plus equity. This accounting equation is considered to be the foundation of double entry accounting system. What is double entry? Double entry accounting states that every transaction has equal and opposite effects in at least two different accounts. This equation ensures that the balance sheet remains balanced. Assets equals liability plus equity. To help you write down journal entries, you should think of assets as debits and liabilities and equities as credits. So, if you want to increase your assets, you add the assets to the debit side. Okay? If you want to increase liability, you add them to the credit side. On the other hand, if you want to decrease assets, you take them from the debit side and you put them onto the credit side. I will give an example to help you understand more. The first example is that we sold $1,000 worth of goods. In this entry, we put cash $1,000. Why is this wrong? First of all, because double entry accounting says it should be equal and opposite effect in at least two different accounts. In this journal entry, we have one account. If you look closely, cash have increased on the asset side, on the debit side. But there was no opposite effect. So, according to the double entry accounting, the proper journal entry should be cash to sales of good. Why? Cash is increased by $1,000, and we've both learned that cash is an asset account. Sales of goods, on the other hand, decreased inventory, which is also an asset account. So, if you have two asset accounts, one increased and the other decreased, that means your accounting equation is still balanced because it went up, assets went up by $1,000 and then it went down by $1,000. That means your equation is balanced. The second example, we bought $1,000 worth of goods, but we haven't paid the supplier yet. So we took in previous videos that accounts payables is when we buy something and we haven't paid for it yet. So where to put it? Debit side, credit side, we will see. Okay, purchase of goods. In this equation, we put accounts payable to purchase of good. Why is it wrong? I will tell you. Because of double entry accounting, you have to think of it this way. Did your asset increase? It did. Why? Because you purchased some goods, so your inventory, which is an asset account, increased. And we said to increase an asset, you put it on the debit side. And accounts payable, what is it? Is it a liability or an asset? It's a liability because you want to pay and you have to pay. You're obliged to pay. You are liable to the supplier by $1,000. So your liability also increased by $1,000. So assets increased, liability increased. That means your equation is still balanced. I hope you've understood the concept. If not, try to contact me through DM, Instagram, or through mail on the mail